Some pretty good Tesla stock news that we need to get into here in this video that I think a lot of people missed on Friday, and this helps put that really bearish thesis to rest over in China. There's a lot of uncertainty how bad things are going to get, how much Tesla is going to have to cut prices, if there's going to be demand in 2024, and I think this shows there will be. Now, on top of that, we're going to get into everything you need to know for this week, and boy, you do not want to miss this video. But first, before we do, we are rocking the cowboy hat today. Oh, Mr. Budweiser really bringing out my non-southern roots here. My daughter, she insisted very strongly that I wear the hat. So that's what we're going to do. Let's go ahead and get straight into it. So the great news for Tesla is this. XPeng delivered 23,205 cars in the second quarter of 2023. And they said in the third quarter, they expect deliveries to be between 39,000 and 41,000 for the third quarter. That would be growth of 31.9% to 38.7% year over year. And I think a lot of people missed this because the markets were not doing great on Friday. XPeng did not do well after earnings. That's for a totally different reason. Why this is positive for Tesla is simple. If China's doing that bad, and obviously we don't have the greatest insights to how China is actually doing over here in the US, well, XPeng wouldn't have guided up almost 100% from their last quarter. This shows people are still buying vehicles. And some of the vehicle registration numbers we've seen out of China for Tesla haven't slowed down. So maybe there's a chance that all of this uncertainty and bad news in China is really overblown. And even if it's not, even if China is going to go into a recession or at the very least a really big slowdown, maybe EVs are not hit as hard. Tesla's not cutting prices on the lower end models. Tesla cut prices on the higher end models in China, which makes sense to do just all around the board when you're able to do that. Obviously, I don't think Tesla's sacrificing margins here. It's China. I'm sure they became a little bit more efficient and had better margins, so they were able to cut prices $2,000 on their higher end models. That's just my speculation. That's just my opinion, but this is positive news for Tesla stock investors. The other news that came out last night is that California regulator probes crashes involving GM's Cruise Robo taxis. This is not good, okay, for Tesla, for FSD, for autonomy. You don't want to see the first players in robo-taxis crashing into things. That's going to make it harder for Tesla to get approval as well. But this could be to Tesla's benefit in the longer term, especially if they need to kind of rework the systems and delay their progress. I've talked about this before on the channel quite a few times now, but competition is the greatest thing that you can have. That's why capitalism, as much as some people don't like it, advances civilization so much, because you always have to keep innovating, making better products, and making things more accessible, improving the quality of life. Without competition, there would never be improvement. So you've seen Cruise and Waymo recently get permitting to operate 24 hours in San Francisco. And now Cruise has to cut their fleet by about 50% while they investigate these accidents. But this competition still nonetheless is forcing Tesla to get on the ball a little bit faster. I think if Tesla had this competition the last 5 or 10 years, we would already have autonomous vehicles, level 4, level 5 autonomy. I am 100% sure of that. You can't convince me differently. Tesla just hasn't had the fire of competition under their you-know-what, and now it's starting to get a little bit more competitive. That is great, again, for Tesla stockholders. This specific incident that has the California regulators concerned, specifically the California Department of Motor Vehicles, the DMV, came after a Cruise robotaxi was involved in a crash with an emergency vehicle in San Francisco late on Thursday. The latest accident involving the self-driving cars. This time, It's not wet concrete. Honda and Acura EVs will adopt Tesla's NACS charging port. They say, quote, "It is quite important," American Honda Motor Company president and CEO said in an interview Friday. "We also have to push NACS as well. It is clear." Obviously, Tesla spent 10, 15 years developing superchargers. There is no catching up to where Tesla is at today. And this is great news for Tesla as well, because the more companies that sign on to this and use Tesla's technology, well, there's $7.5 billion delegated to charging. If the Tesla standard becomes the standard officially, then most of that money is going to go straight to Tesla to build out superchargers. That's a benefit for us. That's a benefit for evolving away from ICE vehicles and to actually getting higher conversion rates for Teslas. I know here in Michigan, most people are concerned that you'll get stranded on the side of the road. Now, most people don't know you get 250, 300 real miles out of a Tesla, and you're very informed of kind of where you're going to run dry on your battery. But it's not like there's Tesla superchargers everywhere. There are a couple here and there, but it's not like gas stations. So the more of those we get, the better it's going to be for an investor in Tesla. We are getting pictures from the port in Australia, the Fremantle port in Western Australia. 749 Tesla Model 3s and Model Ys that just arrived. And it says not all cars are visible in the photo. Now, that's pretty dang good. That's really good, actually, because we know Australia was running quite dry on inventory. There was less than 20 vehicles available last quarter in Australia, so they should be stocked up a little bit more. And to see a record shipment probably means there's really good demand. At least that's what I would assume. Tesla has also shipped quite a few of these cherry red Model Ys, or these midnight cherry red Model Ys. This is something we talked about like 2 months ago, that over in Europe and specific areas, Tesla was going to offer different colors, and this cherry red is one of them. And they have arrived, and boy, are they sexy. That is one good looking car, okay? So, pretty cool. Tesla integrates Apple shortcuts into iOS app, enabling top-tier automation. And that's basically these, where you can just shortcut tasks, right? It says Tesla is enabling Apple shortcuts to climate control features, entertainment, and just for fun, which includes a variety of features like flashlights, honk horn, open frunk, and several others. This looks to be part of the 4.240 Tesla app update and is now available in the App Store. Also in the news, non-Tesla supercharging pilot program is approaching 20 countries. The latest one is Turkey, where Tesla initially selected 4 locations. These are basically charging stations that anyone can use as long as they have the adapter. I don't believe there is an adapter on the actual charger itself. I could be wrong here, but the non-Tesla supercharger pilot program includes Europe, 15 countries, and we have them all listed right here. Most notably, France, Germany, right? Italy, Spain, Norway, Sweden, Finland, Denmark, Belgium, Austria. We have Australia. We have Canada, mainland China, Turkey, and the United States. Last but not least, as far as Tesla stock news that you need to know today, is this rumor of a Tesla van. Now, I think this actually makes a little bit of sense, because this is kind of the last frontier that Tesla needs to break into. We got semis, you got a sedan, you have your typical car, you have your kind of luxury vehicle, and that's your Tesla Model S Plaid, your sports car. You got the truck. Did I say semi? I'm going to say it again. You got your semi trucks. The last thing you really don't have is like vans, like cargo vans, like a Amazon type of van. So maybe that does come down the line. I think we need the Model 2 first, but interesting concept nonetheless. Actually, pretty cool look for a van if I were to say so myself. Let's now get into the major events and catalysts and data that you need to know coming next week and potentially how to prepare for this. And then we are going to look at some of the option activity for Tesla stock and take a look at the technicals. So for your earnings lineup, some of these companies could be important. I don't really care all too much about them. Zoom Monday and after hours, Peloton pre-market Wednesday, Foot Locker, Analog Devices, Kohl's, Advanced Auto Parts. Some of these companies will move their sectors, right? Think Kohl's, think kind of apparel, Advanced Auto Parts, right? You get the idea here. Wednesday and after hours, that's Nvidia. Now, Nvidia, I've said this in multiple videos, but Nvidia is the big catalyst that we know of right now that could give the markets big downside. If Nvidia does not follow through on that crazy guidance they gave us last quarter, that's obviously going to be a very big problem, and the stock could drop 20-30%. I don't think that's what you should be worried about. I think the expectations are too high that basically whatever happens, the stock's going to fall. Because that's what we've seen this earnings season, is if companies beat on everything, they raise guidance, stock still falls because we had super high expectations going into earnings. And Nvidia, they have fallen a little recently, but JP Morgan came out with a note last week on Monday that said now was a good time to buy Nvidia before earnings. And Nvidia went up another 6% this last week. So you're not really giving a margin for error for Nvidia. The Hail Mary for Nvidia would be is if they come out and raise guidance huge for next quarter as well. You normally don't see two massive guidance raises back to back because ultimately it's hard to deliver on that. If that were to happen, then I think the markets would become a lot more stable, and potentially this fall in the markets would be over, at least temporarily. Again, I think there's probably an 85% chance Nvidia falls after earnings. There's probably a 5% chance Nvidia does not come through with the guidance that they gave us, and the stock falls 20-odd%. And I think there's probably a 10% chance Nvidia does give you a massive guidance raise and the stock actually goes up 5 or 10%. So that's kind of what I'm expecting. I think at 85% chance, you get a small decline in between 3 and 7% after earnings. A 5% chance you get a massive drop, and about a 10% chance that you actually get a huge guidance raise and concerns, are overblown in the markets and the markets ultimately bounce back. This could be a big problem. The way that you can protect your portfolio is by hedging for downside risk. This should be a small percentage of your portfolio that, if you're right and if your hedge plays out, can turn into a very large piece of your portfolio. This is exactly what we have been doing in the trading community. If you guys want access to all of our trades in real time, some members have been making a lot of money over there. Last week was a great week for a lot of members, $10,000, $20,000, $25,000 some of those members made. So congratulations if you are one of those members. I know Map to Success, that's his name over there, did very, very well. So congratulations to you specifically. But if you guys want to join, linked down below in the description of this video. Next week, you're also going to have some economic data, but really not much. The big story is going to be the Jackson Hole Economic Symposium, and we're going to let you know exactly what times Fed Jerome Powell is supposed to be speaking and what you need to watch for here. Now, Monday, you don't have much for economic data, a 3-month and 6-month bond auction. You definitely want to watch how these bond auctions come in because the Treasury is filling the TGA, the Treasury General Account, and they still need to sell roughly $1 trillion of bonds by the end of this year. So that could push rates up even further. Now, on Tuesday, you're going to get Fed Bowman that speaks, Fed Goldsby that speaks around 2:30 p.m., Fed Barkin that speaks around 7:30 p.m., and this could kind of precondition us for Fed Jerome Powell. If Fed Jerome Powell does want to have a Paul Volcker moment and really just give us crazy talk about raising rates until we get to 2% inflation, with no regard for the economy, and say some things that are very bad, we're probably going to get preconditioned from some of these Fed speakers starting on Tuesday. Now, on Wednesday, no major economic data, but the Jackson Hole Economic Symposium does start, and that is right here. On Thursday, you're going to get durable goods orders month over month for the month of July coming in at 8:30 in the morning. You're expecting negative 3.8%. Last month's rating was 4.7%. So you're expecting a pretty big slowdown in the economy based off of durable goods orders. So you definitely want to watch that as well. That's almost what you need to see to get the Fed to stop raising rates. The Fed wants to break something, whether it's the stock market, the real estate market, or even the bond market at this point. So those are some things to definitely watch out for. And then on Thursday as well, the Jackson Hole Economic Symposium does continue. On Friday, it looks like we actually get the speech from Fed Jerome Powell at 10:05 a.m. Eastern Standard Time. So if I recall correctly, last year, this was not on a Friday. So I find that very strange. He might be speaking twice, but this is the first scheduled speech we have from Fed Jerome Powell that's actually popping up on the calendar. So this is going to be a major event. Now, I'm not as bearish on this as I am on Nvidia earnings. Now, Nvidia earnings are just set up for disappointment just based off of what the stock has actually done and the blowout last quarter that we had. But with the Jackson Hole Economic Symposium and Fed Jerome Powell, last week on Wednesday, we had the Fed minutes, which said the Fed says they see significant upside to inflation and that they might need to raise rates more. So we're kind of preconditioned to that. What you kind of don't want to see in the markets ever is just getting blindsided with bad news out of nowhere. That makes things a lot more dramatic. So we got the Fed minutes report. We kind of know that there could be more rate hikes. So we're a little bit more preconditioned to it. As far as the markets and what we're currently pricing in, not so much though. So for September 20th, there's an 89% chance of a pause, and this is because the data really hasn't suggested inflation is ramping up again, that the Fed does need to raise rates, but based on Fed Jerome Powell's speech, that will move around the probabilities of rate hikes in future meetings, and that could affect our markets, especially if Fed Jerome Powell is overly hawkish. And there is currently an 11% chance of a Fed rate hike at the September 20th meeting, which is 4 weeks, 4 days, and 20 minutes from now. So taking all of these things into consideration, on Wednesday and after hours is Nvidia earnings. So really on Thursday, you're going to be reacting to that as far as the broader markets. And then on Friday, you're going to hear from Fed Jerome Powell. So I think from now until really Wednesday and after hours, you're probably going to see a bounce with Tesla. Why? Well, because Tesla typically does bounce when the RSI is oversold. Okay, and you're oversold now. And the stock's basically been free falling. It went from 300 to where it's currently at 218.80. So I do expect a bounce to some degree over the next couple of trading days. And if that happens, great. But I do expect some more downside after some of these events. But unless the markets absolutely crumble and we do go through a deeper crash, I don't see Tesla going under 180. A lot of people have been talking 150 or 140 or even back to 100. I don't see that. I think it's most likely you bounce around 200, but if things got really bad and you broke under the 200-day moving average at 196.52, it is certainly a possibility that Tesla stock could fall under that and find that next level of support at 180. So that would be the moment where, can I say, like, sell a kidney moment? Because you would want to buy every share possible you could of Tesla at those prices. Obviously, not financial advice, but people were willing to buy Tesla on the way up during this whole period, even close to 300. They were comfortable doing that. And we got great earnings, just kind of foreshadowing that we might get price cuts in the future. And the stock has sold off to where it is today. If you sell off even more, this is just easier money. So you actually make the money on the buy. When it comes to stocks, when it comes to real estate, you don't make money when you sell. You make money on the buy. So if you buy at a good price, that's just the more money that you're going to make. So keep that in mind. Those are kind of my expectations, but obviously there's a less downside than what we've already seen so far. I don't think we're going to double this downside and fall another, what is this? 28% from here. That just doesn't make any sense. 28% from here would be Tesla stock being at about 150. So I don't think that's logical unless we did go through a major recession and the economy was showing really, really strong signs of one. Last but not least, let's take a look at the option activity. On Friday, you've seen 1,458 orders totaling 1.56 billion with a positive order value of 40%. Not so great, and that is a very large amount of options that were actually bought in Tesla on Friday. Now, the dollar amount that's currently sold short in Tesla stock is 17.01 billion. Any shorts that were short in Tesla on the way up, they might want to start thinking about covering on short positions at some point, and that is another reason why I would say Tesla stock is likely to bounce, at least temporarily, over the next couple of trading days around these prices that we are at. Again, right there with that 100-day moving average as well, currently at $220.46 per share. If you find resistance at that level during a bounce, that's not great. But if you bounce and you go above that, which I'm sure you will, you could bounce as high as about 240 in my personal opinion. I would say 230 is a more reasonable bounce because we only have 3 trading days. But that's what I'm expecting. So let me know down below in the comment section what you are expecting for this week. How are you trading Tesla? Are you hedging? Are you just buying the dip like a madman like I am? Let me know down below in the comment section. Hit the like button and subscribe to the channel if you made it to the end of this video. You like what we have to offer? You want to stay up to date with everything going on in the markets? Well, subscribe to the channel. My name is Michael Tyler. Thank you for joining me today. I will see you in the next one.